So let's start with Dow Jones. Yeah, so there it is. US markets primarily continue to be sideways in spite of all the news that is coming out regarding their economy and their debt crisis. There is no much of impact overall, but they seem to be continuing with the sideways movement. Among the markets which are now at all-time high after the whole after the whole fall that has happened over the last few months, one is your Nikkei. Nikkei is now back to its all-time high. Nikkei is the Japanese market. And the second one is DAX, that is Germany. And Germany is also back at all-time high. While India had gone into all-time high by December last year, and after that we corrected and we have not recovered yet. We are just about 3%, 3.5% away from our all-time high. And though we don't see much of impact of the US markets on our markets right now, highly likely that we may consolidate a little more and then follow these markets and go back into the all-time high and break out from there. So let's watch out for those levels. Interestingly, USD INR on all time frames, the RSI is quite bullish and it also has given a trend line breakout. And so dollar is headed for a newer high probably. And that can basically have a little positive impact on the IT sectors in India. Now, having said that, IT stocks are not reacting the way it should be also because of two reasons. Post the whole turmoil, a lot of their contracts have already been revised. And, the benefit of the dollar increasing, they may not get that now. Unless anyone has a flexible contract, that's a different case. So let's come to our Indian markets. Indian markets, again, have been in the same range that we have been speaking of last 2 weeks. It has not been able to cross 18,300 and downside, it made a low of about, 18,050 approximately. That low also happens to be the 20-day or the AMA average. So AMA is nothing but a smoother version of or noise-free version of the 20-day average. And it is also the 23.6% retracement from the recent lows of 16,800. So market has taken a support. There's a very nice wick that has been formed over there. It's a very nice hammer. And so for now, the downside seems to be rejected on the weekly candle. And market on the upside, as long as it is not able to cross 18,350, the sideways movement will continue. The monthly RSI of Nifty is above 60, but weekly and daily seem to be in the sideways zone. So until and unless there is further upside movement and these breakout, upside for now may be capped. So likewise is the downside also. Now, this is the index and sector-wise movement that we have seen over the last 1 week, where you see pharma and energy and metals have the highest negative impact on the market. While Nifty has fallen 0.6%, Bank Nifty was up 0.4%, Midcap was up 0.25%, and Reality was up 1.28%. So going forward, Reality banking seems to be stronger, and that will continue, being relatively stronger than the other sectors for the next few days or weeks. And among the momentum sectors which continue to be with the momentum are auto, FMCG, MNC, PSU. These are in momentum because the weekly, monthly also seem to be strong. So any retracement in them will only give us opportunities to add more. Now, talking about the stocks for the coming few days and weeks, we always talk about our focus has always been on stocks which are in high momentum rather than looking for bottom fishing. So the stocks that we have been churning also in our portfolio over the last few weeks have been among these stocks itself because the momentum in them continues. So PFC, RECL, DLF, AB Capital, ITC, GAIL, Tata Motors, ICICI Bank, Canara Bank are in our focus for the next week. In this, we already hold a few, we may add back a few. So let's see how it goes, how they play out. Whatever signals we get in them, we'll be able to act upon it. So that is for the stocks in this coming week. So the coming week market expectations is very clear. Nifty monthly being in strong momentum, downside for now will be capped. As long as Nifty is above 18,050, market will be range bound on the upper end of 18,350. Only above 18,350, we can expect further upside, and that may go up to 18,600, 650 for now. And there may be some consolidation there before it hits all-time high of 18,900. Below 18,050, we can expect a further fall up to 17,700, 17,800. So that will be a level where we'll get to enter back into a lot of stocks, and we will have to be a little watchful. So this is for the